Donald Trump wants 50-year mortgages. Will you be paying your mortgage when you are 103? Last year, Trump floated a new 50-year mortgage with housing czar Bill Pulte quickly confirming they are working on it. The logic is 50-year mortgages lowers your monthly costs. It splits the principal over more years, so young people can afford a home. This matters because young people currently cannot afford a home. The median first-time homebuyer just hit 40 years old. One study found that while half of under 30s were married with a house in 1950, today it is just 1 in 8. Meanwhile, across all ages, the median family spends almost 40% of their monthly income on mortgage payments. Thing is, 50 years doesn't do much to cost because the extra time is really far in the future. So you're looking at maybe 15% cheaper, so a $2,500 monthly nut goes to $2,100. In return, you are signing for a lifetime of debt bondage. So nominal interest payments almost double on a 50-year versus 30. So at the moment, you'd be paying $800,000 of interest on the median home. As Adam Taggart puts it, this turns home ownership into debt serfdom. Worse, longer mortgages actually raise house prices because the payment comes down. Going by history, this would raise house prices by 10 to 20% or 40 to 80,000. In other words, the saved payments are completely canceled by higher prices. Now, the prices won't rise overnight. History says 5 or 10 years, meaning Trump can get lower housing costs in time for the midterms, but in the long run, mortgage payments will be the same. You'll just pay it off when you're 103. Now, the background here is the 30-year mortgage was hatched by 1930s dictator Franklin Roosevelt after he screwed the economy so bad nobody could buy anything. Before FDR, mortgages were 10 or even 5 years, with down payments around half of purchase price. Today, 89% of mortgages are 30 years, while down payments are often just 10%, since taxpayers are guaranteeing the debt. So 30-year mortgages did two things. First, they expanded homeownership from half to two-thirds, maybe not as much as you'd expect, but they also drove home prices to stratospheric levels. Houses went from twice annual wage to 11 times today. This is because the longer the term, the bigger the loan, and going to 50 years makes it worse. So what is the solution? Well, deregulation helps. Zoning, union rules, and environmental mandates could cut 80 to 100,000 off the cost of a house. Deportations also help. Catch them all and you could cut houses by 30,000 according to an Urban Institute study. But the big one is the Fed, because artificially low interest rates make every asset go up, from stocks to gold to houses. They turn houses into an investment with the premium match. This is great if you already own a home. The house goes up more than the mortgage. You live for free. It's not so great if you're in your 20s dreaming of starting a family. So what's next? Brought to you by I Trust Capital. After Dems swept last week's elections, Trump is looking for something big on affordability. In the short run, 50-year mortgages will help, but in the long run, they'll drive home prices into the millions and 50-year debt serfs into the tens of millions. Read the rest with charts and all the gory details at profsanosh.com. Okay, we'll be watching. See you next time.